Hey everyone, wherever you are, I hope you're having a wonderful week so far. You're here with the latest episode of the Inside Crypto Show, interviews and discussions with regular people just like yourselves. Today we are joined by Rachid Ajaja, who is a serial entrepreneur and expert in the fields of DeFi, quantitative analysis, and data science. As the founder and CEO of Allianceblock, he drives the development of decentralized infrastructure for major blockchain networks, Web3 builders, and financial institutions, enabling them to have seamless access to new opportunities in DeFi. That is a mouthful. And as usual, we're going to explore more about that as we get into today's discussion. Before we dive into it, Rachid, thank you so much for your time. We were supposed to do this last week, and you still made time for it this week, especially given how busy you are. So I appreciate it. Tell us about yourself.
Absolutely. So thank you, Crane, for having me. It's really cool to be here. So what can I say? So actually you have summarized pretty well. I started crypto space back in 2006 as a moon boy, like as a lot of our community members. We started as investor, then we started to be as a researcher. So we had the group where we started to share, analyze white papers, understanding really the technology. So this is how I got hooked. And actually what made us really start Allianceblock is the first ICO I have done. When it went out, I would say in exchange, we lost 20%. So I said, how come? The technology is really good. How come we are losing? At that time, I didn't still know what is the bear market in terms of the crypto space, the crypto winters and all things. So I started really to go deep, and we saw what's happened on the ICO space, what's happened basically on project just start, like having 30 million, 50 millions, and then we don't hear about them. So this is where I met my co-founder Matthijs, where we met in Telegram actually, and we started to say, so it was perfect actually, we were complementary, and we started to think, how can we make the space better? So we started to think about this decentralized investment platform with milestone-based financing. So this is really how it started Allianceblock. And why we call it Allianceblock is because Alliance, so Alliance community, Alliance one block, and like the block, basically the Alliance and the block for the blockchain. So this is how everything starts. And it helped me a lot what I have done in the past. So I've been quant for more than 15 years, BNP Paribas, Société Générale, Barclays. I work in credit risk, so I know what is mean default, and we will come back on this like a little bit later on. I know what is compliant. I know what is basically like when we trade, like how to build models, how to assess risk, how to do risk management. Then I moved from London to Paris, where I was leading AI research team. So this is where really I was in smart infrastructure. We believe in autonomous car, but we didn't believe even now that autonomous car can be fully automated, fully autonomous. Okay, if you put it in a huge roundabout like in Paris, Charles de Gaulle Étoile, for example, or any busy roundabout, it will never be able to be automated, never, like even the best updates of Tesla. However, if you create this external brain, external eyes that is constantly communicated with the car, this is actually where you can make like fully autonomous car. And when we started to build, so I was like really like working into incident detection, like multi-vehicle, multi-tracking, specifically in the tunnel, because when you have some kind of like incident, you need to act super, super fast. Otherwise, you know what can happen specifically if there is fire. And of course, there was also fire detection, smoke detection. So the first working really on the blockchain, it was when I started to work on this workshop to be able to get how can we use decentralized like networks in order to communicate with these cars. So we start like really thinking about decentralization, distribution, like blockchain network. So this is exactly how it started before even like building Allianceblock. So this is why having really strong knowledge in finance and quantitative, being able to have this AI and this like what we have been working on these decentralized systems, and then being like really deep into technology on blockchain, what make us create Allianceblock. So it's a mix between being moon boy, being risk taker, but also having all of these different skills to be able to, which is completely complementary, of course, to Matthijs. That's made us like Allianceblock. And then I would say the rest is history.
That is an amazing intro. I like usually when founders talk about their backgrounds and stuff, I'm like, I have questions, but like you've answered everything so well, Rachid. You have this incredible story of traditional finance, and you met your founder on Telegram. And when you were having these conversations, right, with Matthijs, right, and you were in Europe and working in traditional finance, going back like 5, 6, 7 years, or like going back to 2013 when Bitcoin was coming up and people were talking about it, how did you get convinced? Because most traditional finance people, maybe less so now, there's okay, crypto is here, we understand it, we're going to use it or partake on it or tokenize with it, sure. But 10 years ago, people were like, no, this is crazy, this is a scam, that sort of stuff. Like, how were you convinced to say, okay, I need to put my time, my energy, my personal resources into looking into this? Like, what said, okay, this is actually worth my time?
Yeah, so I would say, like many, the way that I learned about Bitcoin, it wasn't really the compliant way because it was like back then in 2012. Actually, it was through my cousin, and it was like from dark web. Lots of people were using Bitcoin at that time. I have never, so I just heard about it, I forget it, I read the white paper, but that's it. I didn't do anything. So in 2014, I discovered by pure hazard, just looking to Ethereum ICO. So I remember I wanted to participate, and then I had my boss at Barclays, was I respect, PhD from Cambridge. He was really known. He has done lots of articles, and then he told me, "Don't touch this, is a scam." So I said, in general, I do always the inverse what people said, but I said maybe, but always in the back of my head, it was something. So I started to pop up here. Some people are winning money because they was doing some mining. At that time, you don't need expensive material to be able to start mining Bitcoin. The first time I started to mine, I think it was a little bit late than many people. It was in 2016, actually. And it's funny because I was like doing AI, and we had really like huge computers as well. And I started to do it with the configuration. I started to do it with my computer. And actually, when I connected to the network of the company, everything started to be red, boom, boom, because of course, like I am using external software to be able to mine. So I got, so what are you doing? So this is actually, it was my first experience with mining Bitcoin. But then I was convinced that there is something there, 100%. I have never bought it. I was like checking. I saw what's the story of my empty gox. I saw all the story basically of like how the ICO started. So lots of startups back then, they couldn't raise in equity. Then we saw the smart contracts on Ethereum. Then we had saw the first ICO. So in the beginning, I would say the ICOs was really a way to raise money because they couldn't raise them on the traditional way actually. Okay, so lots of projects that back then they did ICO that are not existing anymore. And every cycle we see that even if you take the top 50, it's always changed. So for us, we're really convinced about, okay, so what can you do in order to give utility to the community? This is absolutely important. And if you take the top 300 projects in general, you will always find that they have really good community, good product, good team. And then when you start to go like top 100, top 50, you will see that they have huge like developer community. And what we notice as well, and this is something we learned it the hard way, but we learned it when we did Allianceblock, that mainly there are three phases in crypto projects. Okay? I will speak with like most of the projects, specifically the one that did IDO back then and ICOs. So you have the first phase, which is hype without fundamental. The price is going up, like everyone is sad, so everyone like is happy, mourning, but there is no fundamental, there is no product, there is just white paper and promise of something. And then there is the phase two, where I would say it's the phase where a lot of projects actually die, because this is where you have the building phase, like the community start losing patience. And then it could take a long time because you still don't have fundamental, but now you don't have the hype because people are always looking constantly for something new. And in bear market is even worse. And they have the third phase when you start having the fundamental and the hype. But of course, it needs to have the right market condition as well. So if you take like all these projects actually survive, they are going through this third phase. Most of the project, they can die during the second phase. And what we noticed as well is most of the ones that succeed as well as the one that build during the bear market. So we started as a project during bear market back in 2018, even though if we have micro bull, and then now we are through the bear market, and we haven't released. If you check all the GitHub actually in terms of push for the code that we have been doing, we have one of the most active in the market, which is really good. So I would say, to come back to, it's not directly related to your question, but really the most important, I always believe that there was something. I discovered by my hand, I would say, starting from 2015, 2016. And then I was really involved in 2018. With Matthias, it was amazing because it's really rare to work with someone that you have never met before. But actually, it was that we were both in community. We were in different groups. We have the reputations we have never met. Also, the group that help us in terms of like to contribution. So this is why crypto is amazing. But this is why lots of people take advantage, because we managed to get like around like 1 million just because of our reputation on the Telegram group. Like the early adopters, the early contributors, they have helped us just because they believe on the idea and they saw that it solved their own problem. No VC wanted to invest, no fund, nothing. And this is what made Allianceblock and what made many projects. So it's the community. Unfortunately, a lot of projects take into account, take this trust, and then they scam people, unfortunately. But for those that can succeed and can go through the cycles, yes, this is also what is the beauty of crypto.
Nice. And I totally agree with you as well, Rachid. Rachid, you hit on a key point here, and that sort of leads into the main conversation. And before we get into the main conversation, I want to remind everyone anything you or I say is just our opinions and not to be connected with Allianceblock or 21 Shares, 21 Co. It's just a discussion here. Rachid, you mentioned macro conditions. You talked about the bear market as well. These are things that people are talking about all the time recently. Are we out of the bear market? Where are we going in 2024? What's happening towards the end of 2023? Given your experience in the crypto industry, what do you think the challenges are as we round out of 2023 and going into 2024 as an industry, as a space? What are the things that you're looking out for?
There are a lot of things. So I remember since 2007, actually we spoke about scalability and interoperability since 2016, 2017. Every cycle we saw narrative. We had the narrative of ICOs, we have narrative of decentralized application, we had the narrative of layer 2s, we have the layer of scaling solutions. So now we are starting to go into the narrative of RWA, real world assets, which is absolutely important. But what a lot of people don't take into account, and some people may see it as a trigger, others can see it as a blocker, is regulation. So on one hand, when you start speaking about regulation, specifically what is happening in Europe, which is with MiCA, which is coming into force, or you have the FATF rule, which are already being adopted by Singapore, have been adopted by UK, and we are seeing more and more countries they are adopting these rules. And we have some companies that already do it, so we call them VASP, virtual asset providers. And for me, RWA narrative, it exists in 2019 with the STO, Security Token Offering. And this is where we saw companies like Securitize, Tokenize starting to emerge, and other tokenization platforms. We have also in the UK Arcax that do like tokenized assets trading, regulated, FCA regulated, and other types of exchange like this. The thing is, back then, there was a huge problem is liquidity. So we saw this narrative take over a lot of projects raised a lot of money, but then it stopped actually because when these security tokens went out, there was no liquidity. People can do their multiple X. And of course, and people lose patience. They don't want, it's like when you buy stocks in the beginning, it can take time. Specifically, if you invest into early stage companies, you need until IPO to be able to get like this, like multiplier, if any. So we lost this SEO. So we have the narrative of DeFi. Started with the explosion of Uniswap, with Aave. So we have on one hand decentralized exchanges, on the other hand we have lending. So we started to see TVL growing. But the problem is we started to have this centralized DeFi starting to take a lot of TVLs, but they misused the money of the users. Okay, we saw FTX. We saw what happened with UST, with Luna. We saw what happened with the Arrow Capital. And so all this, people started to say, okay, the problem is blockchain, but the problem is not blockchain. It's always, as we say, are the players. It's not the technology. Technology is there and it's here to stay. But every single problem that happened, so one, mainly it's centralized entities that doing DeFi, so we call it centralized DeFi, and they misuse. This is because the lack of regulation, because if there was regulation, they would never ever been able to take the money of the users. So this is the first one. So this is where we can see that regulation can protect retail. On the other hand, there is hacks that are happening. But this is like every single industry. .com bubble, when we saw this, we saw like the technological boom, we saw AI. Every time when you have new technology, people still, they don't have the processes, they don't have the proper audits, or sometimes people that are just looking for money, so they do audits quickly, but then it's easy to crack this. But what we noticed also that sometimes people do audit with good companies, they put the report, but then they can do some updates and they don't re-audit. And this is where they can lose. And so it's very important to take this risk. So on one hand, DeFi technologically, it's very good, but we need to have more governance, security audits, like very thorough. But on the other hand, there is decentralized player that they cannot just misuse the funds of the users. We had all these different types of, like I would say, narratives, problems, up and down, which are going also with the up and down of the cycles. Then we started to hear about tokenization. So tokenization for me, it's not new narrative, but the only things that completely changed, like the states, is the liquidity coming from DeFi. And of course, I would say the less compliant things to say is that many of the big investment banks have invested into these tokenization platforms. So having the narrative everywhere is good for them also because they have invested. But I would say on my own point of view, because I completely believe in tokenization. So the big problem, and I would say the challenges when we speak about tokenization, is super easy. Doing it like mainly you have like free smart contract to be able to tokenize any assets. The big problem is the standardization, the interoperability, because more platform you have, the less interoperable. And we saw exactly this happening with the bridges. So we start to say, yes, it's amazing. We start having bridges. So we start having wormhole. We start having like other types of bridges. And the problem is we create wrapped tokens. So one tokens in Ethereum, it will have 5 different wrapped versions into Polygon or into Avalanche, which is actually, it's create more chaos and completely scatter the liquidity. Then we started to say, like, now we are cross-messaging protocols. So cross-messaging protocol is about data. So this is where we are starting to go like more and more towards standardization. So we have like things that has been built by CCIP, with Chainlink CCIP, which is cross-messaging protocol, things that are being developed with Quant over Ledger, that is also like which they are working with MIT, which is SATP, which is the protocol for inter-chain communication. So there are things that have, so we are checking the standardization, like the ISO, the norm compliance, we are seeing more standardization, which is very good for the space. And this is what we are going through tokenization, through the interoperability. How can you interoperate between different standards and different platforms? So you don't create, if you create tokenized art here or tokenized share here, and the same you have tokenized with another platform, you can still swap them. It's the same. You cannot basically say it's different. So we create multiple versions of the same asset. This is not good. So we spoke about standardization. So everyone used the same standard, being able to have interoperability between these different like tokenization platform or standards. And third, which is the compliance, very important, and we'll come back in a bit. And you have the liquidity, access to liquidity. Access into liquidity, actually, this is what make STO go down in 2019. Narrative completely disappeared. Now with DeFi, liquidity is coming from where? From the retailers, from being able to have this lending protocol, being able to have exchanges also that can accept this type of assets that people can borrow, they can borrow against them. This is like LP tokens, basically, that could be like now put as collateral, for example, that could be used also for these tokenized assets. So all these things now are providing the foundational layer to be able to start speaking about tokenization as something that can be done. So to come back to the compliance, and this is lots of people don't speak about actually in terms of compliance. So cool, we have the tokenization. Tomorrow we can tokenize 600 trillion market. Amazing. Like JP Morgan or Bank of America, 16 trillion. Some people speaking about 1 quadrillion. Yes, it's amazing. But yeah, of course, it will not happen like this, because when you have the real world assets, we can start speaking about securities. So we speak about like cross-border regulation. We speak about like KYC. We speak about AML. It's not tomorrow that you will buy a tokenized asset just like this without any KYC. People that are issuing it still need to have licenses. So there is the custody solution. Are you doing it self-custody way? So there are so many questions that we have been working on the last 2 years actually. So this is why like our path in being able to solve the interoperability, this is what we have been building also, and now we are collaborating with both like CCIP, and we have our own bridge, which is very important. The standardization, we have built our own on-chain data container, which are wrapper around multiple assets. So I can have Art1, Art2, this is done with T-Rex, this is done with another standard, let's say 721. I can wrap this one, I can wrap this one, and then it will be the same standard, so I can exchange them. So we have even issued 7208 EIP, so we will start doing lots of marketing around EIP 7208, which is the next level of 721. We call them the ODCs, on-chain data container. It's assets that can store not only metadata, but also data. And you can put into them properties and restriction, what you can do, what you can't do, given certain trigger. So all this, actually now it's put us in the perfect conditions to be ready to not just being another player of tokenization, but to be a driver, because we can make a platform to be able to be interoperable between them. Exchanges, you can go from like this tokenized exchange, the tokenized asset that are in this exchange with this exchange. So this is why we are this infrastructure layer to be able to provide what we call tokenized markets. The last point I would say, I know I spoke for a while, but the last point that is absolutely important to me is that when you work in investment bank, you have the most expensive legacy systems that cannot change. It's billions of dollars. But the problem is when you take teams that are working on commodities, another in FX, another in FI, fixed income, another in equity, it's different infrastructures. Okay, so it's very hard to be able to change stuff. Okay, or to be able to interoperate between different assets, it's impossible. Or if you want to change. Now, having these types of the tokenization itself, and you have the data and metadata in it, you can represent equity, stocks, FI, tangible assets, intangible assets, not in the same way, but at least under the same on-chain data container. Which mean that you can easily basically change them, they will be able to be mutable, you can extend them, you can compose them, and you can make them interoperable. So which will make even the infrastructure and legacy systems, we can build it on top, which will be much less expensive. So yeah, so a lot of things, but this is what passion me.
And it's lovely, to be honest. It's very rare to have a passionate speaker on the podcast who can just talk, and it's just some people, when they just talk, you just want to fall asleep, but when you're talking, I'm just so interested. I'm taking it all, and I'm okay, brain, wake up and learn and study and understand. So I appreciate it, Rachid. Rachid, you've hinted at some of the things you're doing with 𝕋𝕬𝕬𝕖, right? You've talked about different things in the last 15-20 minutes of the conversation so far. Let's talk about 𝕋𝕬𝕬𝕖, right? I've done my research, as I usually with every podcast, but for people who are watching the video on YouTube or watching a short on YouTube or TikTok, they're okay, this is really interesting. I'm going to go to 𝕋𝕬𝕬𝕖 and check out the website. But websites are they're good, but I think it comes better coming from a founder. So tell us, what is 𝕋𝕬𝕬𝕖? What are you doing? Make it all clear for us.
So what is 𝕋𝕬𝕬𝕖? 𝕋𝕬𝕬𝕖, basically, it's really building infrastructure for these tokenized markets. Okay, so for people that are in finance, we have capital markets, which is basically super simply investments. And then we have money markets, which is lending, funding, financing, which is debt. So on one hand, we have the investments. On the other hand, we have the debt. So in the DeFi space, we have decentralized exchange. That is mainly about trading, so investments, capital markets. And we have lending protocol like Aave, Compound, which are more on the lending side, on the money market side. So for us, what we try to do is to merge all capital market and money market, which we call them tokenized assets. A tokenized assets is an asset that could be used as mean of investments, but also mean of debt, mean of financing, bonds or whatever cheaper, whatever types of instruments. So what we try to do and what we are doing, and we have already some clients that we can maybe have the occasion to speak about them later on, is that we are this infrastructure, fundamental, the base, where people will be able to leverage them to have their use cases and to participate into this tokenized market. In where we speak now, there are a lot of reports speaking about tokenized finance, all instruments being tokenized. We speak about tokenization of arts, tokenization of IP, intellectual property, tokenization of what we can tokenize everything. Indeed, it will take time, but there are some use cases that we can already do it, and we are doing it. So to come back into this, the broader definition is we are building the infrastructure of a decentralized tokenized markets in order to create an alternative for capital markets and money markets, being able to make them more efficient, less costly, lower barrier to entry, and to give the tools for anyone to leverage blockchain technology without even knowing what is smart contracts. Or we will have even no code solutions for people. Because I think when we started to hear a lot about AI, people, neural network, LSTM, generative adversarial model, but now it becomes so everyone is using. Even now in a shop, people have not even engineer degree. They are using AI that will help them to do their stocks, to handle their stocks. So tokenization is just a tool. So we don't need to speak about the technology. What is the benefit of the technology? This is if we want the adoption.
That's really cool, Rachid. I have to ask you, you're based in Switzerland, but you're currently in France. The EU is there. So somebody watching this video is, okay, this is really cool. You guys are building tokenization infrastructure. I'm the Royal Bank of Scotland. I'm based in Edinburgh somewhere. I'm oh, cool. I need to get in touch with 𝕋𝕬𝕬𝕖. Are you available? Can somebody from Scotland say, hey, 𝕋𝕬𝕬𝕖, how can you help me and my bank partake in tokenization? Or is this strictly in the regulatory zones that you're operating in?
So the good thing is we are a technology provider. So we are independent from the regulation itself. So the ones that will be subject to regulations, it will be someone that is, for example, building the tokenization platforms within the UK, where he needs to be FCA, or it will be FINMA in Switzerland, or it will be IMF, or it will be SEC. So it depends on the jurisdictions. And of course, you have cross-border in terms of the regulations and compliance. So if someone is in Scotland, or someone is in India, or someone is in US, Like it's easy because you can get in touch from Twitter, Allianceblock, or like just like Telegram. We have Discord as well. And a lot of our community members that are from the US or from UK or from Europe or even from Asia, they come and say, okay, we know this project that could be interesting, and they connected us. So, for example, we are speaking with a project called like Hyphen, which we will do announcement like very soon, that they are doing tokenization of carbon credits, which is amazing. So it took us like 6 months to have the right offering, but at the end, like we managed. It takes time, but it's normal. Same with Archify for the tokenization for arts and to make arts accessible to everyone. So it took 8 months, but at the end, now we have the successful proof of concepts. They have raised $50,000 for their first art, which is amazing. So now we are going to the next one, and so to have this compliance part. But we know that infrastructures, it's not enough. Imagine tomorrow I give you a Ferrari, but I don't give you the keys, or even if I give you the keys, you don't have a driver license. You don't do anything with this. I cannot give like this Ferrari like to all these people, but tell them, look, take it, and that's it. I am just technology provider. So we need to help them. We need to give them the compliance parts. We need to give them access to liquidity. This is what we have been doing with Allianceblock, and this is exactly what we have done with Archify as well. So it's access. So they managed to raise from the crypto community for high net worth individuals that have art that they don't want to sell them. So they have done these sales with buyback option, and then it's 50% return, which is real yield, and it's not just like the yield farming yield that tomorrow it can collapse because it's not based on fundamental. So this is exactly what we do. So not only giving this Ferrari, which is the infrastructures, but also everything around. Access to the liquidity, compliance, KYC, AML, privacy preserving compliance, of course, because DeFi, they don't want to give their data to anyone, so they control who they give access or not. So this is what we do. And this is how people can get in touch with us. It's all in one, the solution that we give. It's not just infrastructures and then, we don't care about what you are doing.
Very cool. You've explained how people can get in touch, right? And you are working with existing projects and you are doing really cool things. So given your TradFi background, are you going to be like people would have seen the stories about Polygon and tokenizing 𝕋𝕚𝕐? Are we going to see stories about Allianceblock and UBS or someone else? Or like, are you going to be working with the big banks, or is this something like a much longer term plan to go in that direction? Or are you happy with where you are now and you're just like, okay, let's work with these smaller to medium sized projects and companies, and then maybe in 5 to 10 years we talk about the big companies?
So big companies is always like on the radar, 100%. The thing is, what people need to understand is like working with a bank, the sales cycle, it takes between 12 months to 18 months, but also you need to prove yourself. It's when you are a company that you want to work with a bank, you need to have some certificate, like a SOC 2 in the US, like ISO 27001, that is from the compliance securities, how you are dealing, like all the flow of data, so the accountability, the auditability, everything, who has the right to access which repo, for example. So this is very important. So it needs like not only it's not just about the technology, but it's about the governance around the technology. It's very important. So we are lucky because we have already started to speak with London Stock Exchange. We are part of London Stock Exchange, like a group. We have also spoke about Capgemini, which we work with them, and we are starting to work, and like we cannot speak about them right now, but with like big consultancy group that will be able, of course, to be our technology partners. So this is also going to market and getting this access to the big bank. You need to prove yourself, which we are like starting to do because we have really good reputation on the market. We have been here the last 5 years. Getting a lot of different clients, it's good because it's proof the seriousness of your technology, the security of your technology when you work all the audit reports, and then working with big guys, big consultancy group to be able to go to market to these big banks. Banks, they do proof of concept for now. They are starting to invest into companies as well that have the technology, but it's not something that they are using until there today. It's always, we are interested, we will do. It's not we are already doing, and some of the players in Switzerland, they are already doing a lot of things. We are starting to see more and more initiative, but it's not something that is, yes, I have all my technology or part of my technology on the blockchain. I am already interconnected with different chains. I am able to do tokenizations from end to end. It doesn't exist. You have companies that provide this, but it's not. We saw London Stock Exchange that they want to build their infrastructures for tokenizations to be able to attract also like companies and like as much players to be the hub, which because they discovered that if you take JP Morgan or Citi, that they have the tokenization platforms, they are siloed, which mean, and they are not attracting liquidity. which is actually the most important. So yeah, so definitely banks, this is something that like we are already having some really cool discussions. It takes time, but it's interesting because we are proving, like with these use cases that we have done. Archify completely sold out. That's perfect. We are working with Agrify, which is for 2 million Nigerian farmers for microcredit, starting with
Nice.
carbonization of carbon credits. We will see, for example, for SME financing. So we have these use cases now that we are working. Same infrastructure, different use cases. So standardizations, having this EIP as well. This is what will even encourage banks to work with us.
Rachid, looking at the future, we've talked about some really cool use cases. The art is probably my favorite so far, but like from yourself, what's spilling the secret sauce, right? What's the most exciting thing you're looking forward to from Allianceblock that's coming down the line in the future that you're like, okay, you guys should hold on because you're going to see something amazing in a few months' time? What's that exciting thing that's pushing you forward and motivating you?
Actually, there are three things that are completely interconnected. The tokenization platform, of course, the infrastructure, but within it is to have the validation of the EIP 7208, which is the on-chain data container, which will completely disrupt the space because it can be interoperable with any other standard. It's not just about tokenization, but it's about having asset on-chain that can hold data and metadata, or link to data, of course, but it's very important that they can have these restrictions and properties. So this can create not only tokenized assets, but it can create structured products, indexes, but also it can create like a new way of doing automated on-chain DeFi strategies. So on one hand, there's the standardization. So this ODC, the EIP 7208 is the standardization. This is. And then we have two things that really excite us a lot. So the first one is the privacy preserving compliance. We have been speaking about compliance since 2019. A lot of people, they never took us seriously. Yes, compliance, it will never come. So before even speaking about MiCA, before even FATF rules and all this, but we knew it will come. So we are really well positioned. But not just about compliance, because now we are having the 𝕋𝕚𝕐 identity that is going out that can aggregate know your transactions. This is Elliptic, Merkle Science, the big blockchain group, all these different types of know your transactions. We can have KYC, KYB, know your customers, know your business providers. We can aggregate data with type of fraud prevention, trade surveillance, IP monitoring, like sanction lists, PEP. So all these things, it could be done, but it could be done in a way to be able to build a really framework of automated embedded supervision for DeFi, even though DeFi will come most probably for the MiCA 2.0. But everything starts with the users doing his own KYC, his own onboarding. And then if he wants to go to the trade, actually he can generate, remember the on-chain data container, it will be the passport of the user, the digital representation. It will store his proof that he's more than 18, his proof that he's not living in the US, his proof that he's not PEP, his proof that he is regulated or he is licensed. And given this proof, he will be able to get access to new, for example, to be able to lend, to be able to borrow, to be able to trade. So we have released our partnership with Spool, which is institutionalized DeFi for the strategies and risk management, and then they will be able to leverage 𝕋𝕚𝕐 ID for this. We have been speaking with Maverick, which is amazing decentralized exchange that is building, optimizing on what Uniswap V3 that has been doing. They are also like something that we can do on the privacy preserving. And this is something that actually will release very soon in terms of the end-to-end. And this is no one has done, because the biggest problem is how can you store your proof on-chain? And then you can use them basically without whitelisting people. So everything automated. So this is the privacy preserving, and it can create like a really amazing protocol on top where you can have proof of authorities, validators, aggregators, and so on. But this is. And then you have the exchange. So we have released 𝕋𝕚𝕐 Exchange, which is the first and only fully on-chain spot limit orders. You have perps that are on Arbitrum, that are on other chain. But 𝕋𝕚𝕐 Exchange is the only currently spot fully on-chain with limit orders, which is completely built on top of Uniswap V3, which is actually make it more transparent because you can see the order book, you can put your orders, and if you don't have enough too much, it could take it from the pools actually. So it's really perfect in terms of, and also the design, it has done taken into account centralized exchange. Super easy. And now people will not even need, like very soon, will not even need to connect their MetaMask. So they will be able to get their MetaMask or like whatever types of wallets. But for those that just want to trade, they will be able to do it just with their password or with Google ID or their Apple ID or their Face ID or Touch ID. They will be able to connect and create their wallet without knowing anything about what is blockchain. This is the first step of the exchange, but then it will be connected to the privacy preserving compliance and starting to have some regulated trading, compliant trading, but also we'll have the RWA, which is real world asset trading. So everything is connected. So at the end, our core offering is infrastructure, trading, so issuance of the tokenized assets, trading the tokenized asset compliantly, being like the privacy preserving compliance, where users are still keeping their privacy while being compliant, access to liquidity, because this is what we have been done with Allianceblock since a while. So basically we have all the blocks. So what we have done is it's a Lego game. So we have all these modules. After 5 years of hard work, you put them all together. You create the tokenized markets, because tokenized markets, you need trading, you need compliance, you need risk management, you need issuance, you need liquidity, and you need the infrastructure, you need standardization, you need interoperability. So you can tell me, yes, Rashid, it's cool, but why you didn't use like these other providers? We can't, because this is so nascent markets that if we rely on important module on a third party and tomorrow he failed, we are in bad shape. So we choose this. We choose to build everything for us. It was very hard, but 5 years of building, we are there. So, and this is why when people speak about tokenization, they forget all the other stuff. So either you need to be an exchange like SDX or London Stock Exchange, where you have huge amount of money and you have everything, or you are on the digital asset space and crypto space, then you need to start to do in partnership. But tomorrow, if one of them is not, I'm not speaking about the big guys, of course, but if tomorrow you are using a third party and finito, yes, you are also dead in the game. So this is why we have all the important modules that we have built ourselves. And now we can say that we are ready. So this is what is exciting.
That is super exciting. And Rachid, I've got to thank you so much for being on the podcast and just talking about everything today. I know you're super busy, right? And I don't want to take up too much of your time. We've totally done this like totally off script, which has been really fun. Before we end up today's podcast, like in every podcast we do, I always like to give guests the chance to say, okay, did your marketing manager tell you, hey, Rachid, make sure you say this? The floor is yours. If there's anything you want to say about Allianceblock, about crypto, about what you guys are building, anything that you're supposed to say that you didn't have a chance to say, the floor is yours. Take as much time as you want. Tell our audience what you'd like to end off today's show on.
Yeah, so I will say something very important to me. Like, we are in space where competition is more important than competition. We are in a nascent space where we need more collaborations. Of course, we need like to help each other. I said that you cannot rely on third parties, but there are amazing projects that are building like us that are very serious. We need to believe in the teams. We need to believe basically on the, like, when specifically in the bear market where people start losing patience, they need to see what people are doing. They need to see the activity of the project. So this is very important. I'm speaking here toward our community that have been with us the last 5 years. The up and down, it's very important to us, and all the new people that discover us today. That is very important when you check project, no matter what is the project, to check the seriousness, like basically what are the products? Are they solving real pain points? Are they doing something that will help the community? Or are they just like building something that will not be used? This is very important. What is the utility of the product? The utility of the product will bring the utility of the tokens, and not the other way around. It's not because I have utility that I have already the product. So this is why we need to make the difference between what is on the white paper, what is on the token economics, and what is really existing. This is, and I believe that you can build the best ever token economics. If your products are not leveraging like really the utility of the tokens, it's like you didn't do anything. So this is for me, once you have this product, then you start discovering the real utility. We are trying to build something like, we work hard during like up and down, even though even people, of course, you will always have people that like and people that hate, people that don't take seriously what we do, but others that see what we are doing. I think it's very important like to be patient, specifically on the blockchain. Like Rome, it's not built in one day, specifically when you want to have a legacy. We want to leave a legacy behind us. This legacy for us is important, and it's not just it's like any other legacy, is being able to really create an alternative way to capital markets and to money markets. Really create a world that is inclusive, where people basically are able to get access to opportunities, and not like, for when we speak about AgriFi microcredit, for example, they will never get access to a bank for a loan. Now with this technology, they can get access because other people in DeFi can bring this liquidity. So this is what is really important. So inclusivity, transparency, getting access to all these opportunities. This is very important. So we need some point to see, like when we have the updates, like it's very important to believe on the vision. So it's like the team member working for the project because they believe no matter the up and down. It's the same for the community. A good project like that will survive is the one that has a huge community behind them, that believe in the vision and also the product that will be used no matter what. Sometimes finding the market fit is very hard, specific in projects like in crypto in general. So it took us a long time to take the market fit. Sometimes we're even too late or even too early. Now we are at the right time, with the right technology, with the right team, with the right community. So yeah, so I want to say thanks to everyone that has believed on us and they have been following us, and on new people that will say this and will follow us. So yeah, we are here to leave a legacy, to create a better world than what we found, and like to leave something even better to the people that are coming after us.
That is the perfect way to end off today's show, Rachid. Rachid, so Allianceblock's socials, whatever you guys have on your website, I'll put those down in the video notes, in the podcast show notes as well. For people who are like, oh my God, you're an amazing speaker, I want to follow you on Twitter or wherever else. Are you available on social media, on Twitter or LinkedIn or places like that for people to follow you?
Absolutely. It's Ajaja Rachid, AJARACHID. My Twitter. It's like you will see my face, and I try to speak about the project, but also speak about things that interest me. It's very important how I see the future. And sometimes when there is a new technology or when there is a product, I always try to explain what we are solving, what are the problems, and why what we are doing, it makes sense of these problems. So this is very important to me. I take time. I think not everyone read everything I do, but I try to keep this. So sometimes when someone wants to find it, they will find it. And they can maybe even use it when they want to pitch their company or to convince their boss to use technology. Because I try also to give like rational, I would say, arguments behind what we are doing. Because you cannot just use blockchain for everything.
Cool. Thank you, Rachid. Thank you so much. And hopefully I will be in Switzerland actually next month. It'll be nice. And maybe we can even meet up then. And hopefully we can even catch up next year and maybe do like a recap and say, hey, this is how Allianceblock is doing. Yeah. This is happening with RWA. Yeah, you're an amazing guest. Thank you again. And we'll catch up soon.
Absolutely. Thank you very much. Thank you.
Thank you.